Greetings everyone, it's Michael Anastasiadis here, mortgage advisor from Bosanoff Mortgages, Mortgages Made Easy, coming to you live with your weekly mortgage and interest rate update and inside today because it's a bit of a windy, gloomy day here in Wellington. And unfortunately, no changes to the fixed rates after yesterday's OCR announcement. So we're waiting patiently to see when or if any of the big banks are going to change their fixed interest rates. And it's the day after the OCR announcement. So a lot of commentary, been reading a lot of stuff, mixed opinions to see if the banks will even do a cut to their fixed rates. One thing I forgot to say on my video yesterday is one of the ladies from the Reserve Bank Monetary Bank Policy Committee, she did mention that that she thought that the banks could be a little bit more aggressive with their fixed rates. So, you know, you can read between the lines what they were trying to say there. But right now it feels like the banks are competing, trying to win business with cash contributions rather than doing anything to the fixed rates. So, look, as soon as I see one of the banks change the rates, I'll let you know, and then I'm pretty sure the others will follow suit. So it's just a matter of waiting and seeing at the moment. Now, some other observations that I picked up from yesterday, and I've made some notes here, is that property prices will incrementally go up during 2026. There's already been an increase in sales numbers and prices compared to this time last year. So that'll keep happening until next year, but it's going to be slow, right? It's going to basically, look, I think we probably we're at the bottom. If not, we've already been at the bottom, especially here in Wellington in terms of house prices. So they will only go up from here. That's my own observations. And look, I'm only a small sample size with the business that we run here at Bosanoff Mortgages, but our phones have been ringing. And in particular, our first home buyers, they have been not only active, but successful. So, of course, the numbers are going to be high compared to this time last year. So when the stats come out for November, December, and the coming months, you'll probably see some people panic thinking, geez, now's the time to buy. So you'll see some people dive back into the market. But, you know, I am thinking that we've passed the bottom of the low house prices, and they'll start slowly going up. And I think the Reserve Bank said yesterday they're forecasting somewhere around 4% increase in house prices over 2026. The other thing that I've also read today, and you know, some of the commentary yesterday, rentals for those investors, for those investment properties, it's getting harder for them to rent out the properties. The population isn't there anymore. The migration hasn't come in, and the people leaving New Zealand has gone too high. So there's a bit of a demand and supply imbalance at the moment, with not only the properties for sale, but also with the investors trying to rent out their properties. So you'll see some renters, some investors will probably put their properties on sale, because I don't think we're going to have the busy January, February like they normally do when all the students come back, look to go flatting. So that was another little observation. Something else that I've been reading is inflation in Australia is still high, and they're picking that the next Reserve Bank Australia decision will be a likelihood of a rates increase over there. So that'll have implications for us here. While meantime, over in the USA, they're going to look to, I think Trump, we all know, is trying to replace that guy, what's his name, Jerome Powell from the Fed, because he wants to put someone in there that'll lower the cash rate over there. So all these things are going to have an impact on New Zealand rates next year. Plus, there's an election. And usually when it's election year, especially when there's a national government in charge, things tend to go pause, because there's some business owners and some people that panic at the idea of Labour coming in. So they put all their big spending items on pause, hiring on pause, that sort of stuff. But, you know, history tends to tell us that once Labour comes back in, I think it was Bob Jones that said the champagne starts flowing because they're reckless with other people's money and all sorts of things start happening to stimulate the economy in his tongue-in-cheek way. So there's a lot to happen in the New Zealand economy over the next 12 months to see where we just don't know where the rates are going to end up. And that's really what the focus is going to be on now, is where will rates go over the next 6 to 12 months. If you look at what the Reserve Bank put out yesterday in their monetary policy statement, no change at the stage in the OCR until late 2026, early 2027. So it'll be what the Reserve Bank want is a boring year next year where things slowly go back to equilibrium, and then they can slowly raise the OCR from the 2.25 back to 3% where it's neutral. It's not stimulating the economy, but it's not also having a restrictive effect on the economy. So there's a lot of things here to come into play over the next few months. And like always, I'll be giving you those updates live every Thursday. So anyway, I'm going to sign off, guys. As soon as I see a movement from one of the main banks with fixed rates, you'll see me jumping on live that afternoon to give you the news. In the meantime, I hope it's less gloomy where you are. And who knows, I might put a boring video tomorrow in front of the blackboard, because that last video I put last week went a bit crazy. Anyway, ka kite, God bless. I'll be live with you soon.